In this video, I'm going to discuss some of the various retirement plans available to you as a small business owner with a focus on contribution limits and tax deadlines that you really just need to be aware of, right? So plans such as IRAs, SEP IRAs, solo 401ks. We'll talk about how much you can contribute and when to do so in this video. And due to the Secure Act that was recently passed, the rules have changed. So stay tuned to make sure you are aware as you've got sort of more options than you've ever had before. A lot of new and quite honestly, even my existing business owners confuse these dates. So hopefully, if you continue watching, this video will help clear things up for you. Before we get into the actual screen sharing and what I prepared for you to help facilitate our discussion, let me just quickly introduce myself. If it's your first time here, my name is Navi Miraj. I'm a CPA who helps entrepreneurs save thousands of dollars in taxes. I do that by creating free content here on social media. But there's also a course, a resource on my website, which is navimirajcpa.com. In that course, I teach you all the tax strategies, how to implement them, a little bit about accounting and tax. And at the end of that course, you should be able to implement all the strategies on your very own, all right? Before we go too deep into the screen share, let me just quickly give you sort of a little bit of a disclosure here that the numbers that I'm talking about in here are your 2022 tax year numbers, but these numbers are adjusted for inflation almost every year. So if you're watching this in a future year, then do a quick Google search, make sure that these limits haven't changed. I know for 2023, they've changed already, okay? So again, 2022 tax year for when you're preparing your taxes in 2023. So let's start with the IRA, okay? How much you can contribute with whether it be a Roth or traditional IRA is $6,000 for the 2022 tax year. And you can do an additional $1,000, so $7,000 total, if you're age 50 or older. The important thing to note here, and this is what a lot of people get screwed up on, is the deadlines, okay? Even if you file an extension with your personal tax return, you still need to make your contribution by April 15th. And that is pretty unique to IRAs, so you need to be aware of that. As you'll see in a moment, the other retirement programs allow you to make your contribution all the way through September and sometimes even October, okay? So that's IRAs, whether they're Roth or traditional, your due date is April 15th, no matter what. And the amounts are $6,000 if you're under age 50, and if you're 50 plus, it's $7,000 because you get an additional $1,000 sort of catch-up contribution. So let's move on to the next most common sort of retirement plan, that's the SEP IRAs, okay? Now you can have a SEP IRA if you're taxed as a sole proprietor or if you're taxed as an S corporation. So that's what I've denoted here. And again, what makes this confusing is it's different depending on how you're taxed, okay? So with a sole proprietorship, you can contribute up to $61,000 in the 2022 tax year. Now, this is there's a formula to calculate how much you can contribute, and it's based on the profitability of your sole proprietorship. So don't assume that you can do the full $61,000. Your contribution deadline is April 15th when taxed as a sole proprietorship. However, if you file an extension, then you can make your contribution all the way until October 15th. So no extension, April 15th, with an extension, October 15th. With an S corporation, it's a little bit different the way it works. What you do is you can actually contribute up to 25% of the employee's W-2 amount. So if you're the business owner, right, and you decided that your reasonable compensation was $40,000, then your contribution as sort of the employee would be 25% of the 40 grand, so $10,000, all right? Now that's assuming you do the full 25% of wages. You could do a percentage less than that. That's just the maximum, okay? Now, your contribution deadline is March 15th, and that's if you don't file an extension. But if you file an extension, you can actually contribute all the way until September 15th, okay? Now, something, again, unique with SEP IRAs. This is another part of the reason why people get confused with this stuff is even if you're age 50 plus, you cannot make what's called a catch-up contribution, okay? So it's $61,000 is the max you can do in a SEP IRA, no matter what your age is, all right? So let's move on to the next type of account, the solo 401k. And you can have a solo 401k if you're taxed as a sole proprietorship, or if you're taxed as an S corporation. Okay, a lot of people don't realize you can have a sole proprietorship and have a solo 401k for your business. So how much can you contribute? Again, it's $61,000 for the tax year of 2022. And this also too is a formula to calculate how much you can contribute. And it's based on the profitability of your sole proprietorship. So again, don't assume that you can contribute $61,000. The contribution deadline is April 15th if you don't file an extension. But if you file that extension, you can contribute all the way until October 15th. Okay. Now, what about a solo 401k where your business is taxed as an S corporation? Well, here it works a little bit differently. Here, what you do is you actually can defer up to $20,500. Again, that's the 2022 tax year amount of your W-2 wages. So again, if the business owner was paid a reasonable compensation of $40,000, then the business owner could defer up to $20,500 of that into either a Roth or a traditional 401k. So Roth is after tax dollars, no tax break right now. Traditional is pre-tax dollars, so you get a tax break right now. And if you're age 50 plus, then you can defer an additional $6,500, bringing it to $67,500, okay? Now, that's the employee contribution. What about the employer, okay? Well, the employer, which would be the S corporation, right, the business, it can contribute up to 25% of the W-2 wages that were paid. So in this instance, the S corp itself can contribute up to $10,000, right? That's 25% times the $40,000. Now, here's the kicker. This amount that the S corporation is contributing, this is tax deductible. There's no Roth option, okay? So you can't use after-tax dollars for this. This is tax deductible sort of contribution that the S corporation is making. The contribution deadlines, it's March 15th if you don't file an extension. But again, if you file an extension, you can contribute all the way until September 15th. Now notice with the solo 401k, I've got an asterisk here. So let's read this text box to make sure you kind of understand. There's a little bit of a nuances here that I want you to be aware of, okay? So I say here that this sort of requires advanced planning to be able to contribute the maximum for a solo 401k. In particular, if you have a business that's taxed as an S corporation. So let's read what I've got below here. Establishing the plan by December 31st of prior year to make employee deferrals. So this is part of the advanced planning, all right? I'm saying here, you need to establish your plan by December 31st of 2022, right? Because that's the tax year we're talking about, to be able to make employee deferrals, okay? Now, here's something that's kind of new. So due to the Secure Act, you can establish a solo 401k after December 31st. That's allowed, but you can contribute only the employer profit sharing contribution. So remember how I said it was 40 grand times the 25% equaling $10,000. So that dollar amount can still be contributed even if you didn't establish the plan, prior to 12/31. But you're limited to the employer contribution only. So like it says here, if established after 12/31, you cannot contribute the employee salary deferral contribution, all right? And the last little bullet point here, determining employee contribution amount, and I should say determine employee contribution amount and include it on the W-2, which is due by January 31st of the following year. And you need to kind of coordinate this with payroll. So what I'm trying to say is like, okay, you can make your contributions up until your tax return deadline, but really with an S corporation that's doing this sort of solo 401k tax strategy, if you want to call it that, you need to coordinate this with payroll, and your W-2 is due on January 31st. So although ultimately you might be able to make that contribution at a later time, you really had until January 31st to do the employee portion, okay? Again, with the Secure Act, you can do the employer portion after that, and that would be fine, okay? So that's what I wanted to share with you. As I mentioned, a lot of business owners make mistakes here, so I thought it was important to clear this up. Hopefully it did for you. Don't forget though, if you learned something or got value out of this video, please consider subscribing or following depending on what platform you're watching on. And you can always find more even free resources on my website, which is navimuradcpa.com. If you're watching on YouTube, you might want to check out some of these videos that are popping up here in a second. In addition to the one you watched here, I think you'll like these. And also, I guess with that said, I'll see you either in the course or in the next video.